This is part 2 of a 10-part Irish income tax series, starting at beginner level and finishing at expert level. Each video covers one practical tip, and today we're talking pensions, because a pension is one of the only legal ways to reduce your tax bill in Ireland. If you're a PAYE worker, you have 3 options. They all save for retirement, but they work differently. The options are auto-enrolment, a PRSA, and an employer pension scheme. Auto-enrolment applies if you don't already have a qualifying occupational pension at work. If you're aged 23 to 60 and earning over €20,000, you should be automatically enrolled by now. The percentage contribution is 1.5% in the beginning and rises to 6% but over 10 years. The contribution amount is capped at €80,000 of earnings, and there's no tax relief for this type of pension. You certainly won't get rich on it, but your employer must match your contribution level and the state will add a third of what you put in. The next option is a form of personal pension known as a PRSA. If your employer facilitates it through payroll, you get income tax relief at 20% or 40%, but you pay PRSI and USC. Employer contributions aren't a benefit in kind, and because it's employer linked, you're not auto-enrolled. If your employer doesn't facilitate contributions, you can set up a personal PRSA and the position is the same. If your employer already has an occupational pension scheme, look at you. That's usually the best value. You get income tax relief at source on contributions you make, and your employer must also contribute, for which there's no benefit in kind. So that's the landscape. Auto-enrolment if you have no scheme, PRSA if you want flexibility, and an occupational pension if your employer has one. Make sure you know which pension is right for you, because over the long term, there are significant differences in the outcome on retirement.